and welcome to ABC Bullion's 360 Weekly Wrap. My name's Bron Suchecki and I'm joined by Nick Frappell, Global General Manager at ABC Bullion. Welcome, Nick.
Hello, Bron.
US gold price finished the week pretty strong. Do you think it can push up through 1750?
It certainly looks that way. The configuration is bullish. It's well above the daily cloud and so on. The 1745, 1750 level has been an area of resistance. Even though we're at about 1750, it hasn't sort of broken free from that.
Convincingly,
Not convincingly. People might have expected more out of US dollar gold, but it's technically good. And of course, the conflict on the Indian-Chinese border last week, definitely an added geopolitical fillip to the price. If you look at the gold worldwide ETF holdings, almost 102 million ounces, definitely heading in the right direction. And actually, even the managed money gold on CME increased their positions by almost 8%. A little bit of short covering as well, so that's positive.
That's good. Australian exchange rate really weakened off of the week, come down, sort of pushing 68 cents as we talk.
That's right.
Is it going to hold that, or you reckon it can get down a bit lower?
I think it should target a little bit lower. Last week we talked about 0.67, even 0.65. There are more targets around that level. Nothing really dramatic. What I did notice was that some of the Aussie dollar shorts covered their shorts, bought back fairly significantly in the week ending Tuesday the 16th. But if you look at the overall picture, I expect that slight weakening to continue. Yeah,
good. So that'll be positive for local prices. I noticed the gold's back into the mid 2500s in Aussie dollar terms.
Yeah, that's right. And I expect Aussie, in the very short term, Aussie gold would have resistance around about 25.70. It's got targets to 25.90, and of course, in the bigger picture, it can go further than that.
Yeah. It's been quite volatile, going down to 2400 and 27.
Yeah, it is.
There's a lot of.
So that's really just a short term, call. That's 25.70, 25.90 is, really talking about the coming week.
Yeah. While we're talking about exchange rates, the US, there's been a lot of commentator concern about the Fed really expanding the amount of assets that it's buying, ETFs and corporate bonds and all this sort of traditional stuff that they would normally get involved in. Are we sort of getting down to a sort of Japanification, that path of Japan in terms of what the Fed's doing?
On the face of it, it could look like that because the BOJ has got an even more aggressively expanded balance sheet, and they too have got a well-established history of buying ETFs and so on. I think it's a little bit different in this case because the Fed is responding to an acute problem, and the acute problem is the relative closure of the economy under COVID, whereas the BOJ is responding to a variety of chronic problems to do with undercapitalized banks from way back. They're getting better now. Aging demographics, declining domestic demand. So I think at this stage it's quite different.
Right, okay, interesting. All right, and stay in touch with the markets by following us on our social channels or visit us at abcbullion.com. Until next time, thank you.
Thank you.